underwriting principles, guidelines in place, and underwriters who understand the risk and who can underwrite this risk. Underwrite means estimate the risk in everyday case. You need to have the sales force who deliver this insurance to the farmers, to the end users. You need the financial capacity, which is basically insurance companies plus reinsurance companies. You need to have the management information system where you can put all the information, where you can derive all the necessary reports and analyze your process, your portfolio at any point of time. And you need to have the system of loss adjustment. And in different countries it's done in different ways. Sometimes all this infrastructure within insurance companies, sometimes some functions are in the insurance companies, some functions are in the underwriting agencies, like for example, Tarsim, Turkey, state underwriting agency does the product development and to some extent underwriting and nominate the loss adjusters, and they develop the loss adjuster system. And the insurance companies, they do the sales, they provide the capital, and they have the management information system. And Tarsim negotiates on behalf of the insurance companies, negotiates the reinsurance for the entire pool, for the entire market. In India, we know that, for example, every insurance company negotiates this insurance by itself through the brokers. Is okay. So then subsequently these departments need to be rewarded for their work, for the quality of their tasks. You know, for this purpose I have my favorite joke about insurance. Like three people, they're driving the car. One of them is the broker, one of them is underwriter, and one of them is the actuary. So the broker pushes the accelerator, the underwriter pushes the brakes, and the actuary looks at the back window and says where to go. Usually the actuaries, they look at the past year statistics and they try to predict what will be in the future. I know always the future is unpredictable. So, marketing. This is in Australia. This is very famous world climatologist, and this is the Australian farmer. And this climatologist, he's not selling the insurance product, but he's explaining to the farmer the weather derivative. Basically, weather derivative is the equivalent of index insurance, weather index insurance. And apparently, Australian farmer understands this perfectly because he's highly sophisticated. He's already using this weather forecast and all this El Nino correlation and blah, blah, blah. And it's like he makes his farming decisions already based on these weather indexes. And whenever you come to the farmer and try to sell insurance, this is not only with the farmer. Whenever you try to sell any insurance, you come to the client, the immediate question that the client will ask, how much does it cost? No matter what you said, the client always said, no, it's expensive. And of course, especially in the agriculture insurance. So then if you want to deliver this agriculture insurance to the clients, then make the story around this, make the wider story that the farmer can go not only from the perspective of price, but from the perspective of usefulness and health and other values of this insurance, not only the cost of insurance. And, well, the insurance is appreciated only after the farmers have losses. In Europe, for example, in 2016 and 2017, there were quite substantial frost losses, spring frost losses. So the farmers started to run to the insurance companies and said, can you please insure us against this risk? Then, a couple of years later, pain is forgotten and nobody wants to buy insurance. But that is why you need to keep this awareness high all the time. You need to warm up them. You need to give them, you need to show them the scary pictures with the big hail on big damage from the frost or from the drought. So this is the investment. This is sales. So it has its cost, and you need to input this cost, whether in the form of the education or whether in the form of the direct sales. And also, in the agriculture insurance, what is important that the salespeople, they are trained exactly in the specific of agriculture insurance. Because very often what happens, the general agents that sell different lines of insurance, they also sell agriculture insurance, but they cannot operate with this very subtle specific of agriculture. They don't speak the same language the farmer speaks, especially with this industrial farming. Industrial farmers very sophisticated, and just general sales manager comes. So he cannot adequately answer the farmer's question, so the farmer is not impressed. So the educating the sales staff should happen every year. There are some seminars for the salespeople. And the salespeople, they also need to explain the value of the insurance company where they work, the value of the insurance in itself, and also be transparent what the farmer can expect and cannot expect. There is something that is called deductible in insurance. Deductible is a certain percentage that is deducted from the claim, or that is not paid. In the car insurance, for example, if you need to replace some spare part in the car, so you need to contribute some certain amount of money, and after that the insurance company pay you the claim, right? In the agriculture insurance, the farmers don't pay physically this money, but it's just some certain percentage is deducted. The concept of the deductible is very difficult for normal people, non-insurance people, is very difficult to perceive. So it needs to be communicated because they cannot read this, they cannot pick this from the insurance policy. Nobody reads the insurance policy. Even the professional reinsurance people, they don't read the insurance policy when they buy insurance. People start reading insurance policy after they have the claim, or worse, after they've been refused to receive the claim compensation. Only then they start. So this is the task of the sales force of the insurance company, to explain the key points to the farmer, be transparent. Then the relationship is better. Then this insurance more sustainable. Then there is more renewability. But okay, this I'm talking about the voluntary insurance. I'm not talking about this compulsory insurance when no matter the farmer is satisfied or not satisfied, if he takes the loan, then he's obliged to insure his crop. There are multiple sales channels. Again, from perspective, not from the perspective of India. So that can be the own agents of the insurance company, that can be office sales staff, can be the independent brokers. India is very much the broker market, and the brokers are quite dynamic in India, I would say. All insurance brokers and reinsurance brokers. Bank insurance, in agriculture insurance, very common things. And the insurance is connected to the bank loan. Then there are suppliers of seeds, pesticides, fertilizers. Sometimes they used as a channel to sell agriculture insurance. It doesn't always work, but sometimes it's possible. Then instead of approaching the individual farmers, you can approach the farmers' unions, and even the manager of the farm union can arrange the insurance for his individual farmers. Mobile insurance, it's the part of the technology that is currently becoming more and more popular in these countries with the smallholders, with the small farmers. No matter how poor the farmer is, mostly all around the world, all farmers have mobile phones. And there are certain programs in Kenya where insurance is completely delivered by the mobile phones. Even the policy wording, the payment, the insurance premium payment, and loss payment, everything through the telephone account. And definitely internet insurance. It's also, but okay, you smallholder farmers probably don't always have the computers, and don't go to the computers that somebody might need to do this for them, maybe the brokers, for example, so the brokers might have the function on behalf of the farmer to buy the insurance or to receive the quotation. But the certain lines of insurance can have the automatic quotation within the system, and the clients might buy by themselves. Sorry. So this is the example of the marketing material. The brochures, very common things. that gives the very, very short explanation what is covered. Here is the brochure for the bank insurance for the farmers in Serbia. Then the posters in the places where the farmer comes most often. This can be the post office, or this can be the office of these agricultural suppliers. For example, I was in Bhutan, and they have lots of these monasteries. So all the supply to the farmers happens in the monastery. And very interesting, like very helpful marketing material is called fact sheet. This is the example from Canada. As I said, the farmers don't read the insurance policy. It's too complicated document for them. But the fact sheet, it's something that reflects what is covered and explains what the farmer needs to do in the situation of the loss or the certain critical point in the simplified way. And it actually makes life easier for the salespeople and for the underwriters and for the loss adjusters. What underwriting is? Underwriting is the estimation of the risk and subsequently the decision. Do we want to accept this risk for insurance, or don't we want to accept this risk, or what we can do? If, for example, we see that risk is quite bad, but we cannot refuse the farmer, then we might put some additional limitations. We might increase the insurance rate, we might increase the deductible, we might decrease the limit of the sum insured, and something like this. And this is the underwriting of the individual risk. Means the risk for one farmer, for one farm, for one crop, for one field. So this is the individual underwriting. But there is also the underwriting for the entire agricultural portfolio. And this is the task of the underwriters in the insurance companies to do this analysis and underwriting of the portfolio. And portfolio underwriting has completely different perspective to the individual risk underwriting. And I can tell you that when I was the reinsurer, and reinsurers constantly do this to price the portfolio. They need to do not the underwriting but the estimation of the portfolio. Reinsurers need to do so. They have the perspective. They look at the entire portfolio. But basically, it should be done already in the insurance companies. But what I see in the reality that in many cases the underwriters are quite brilliant with the individual risk underwriting. They don't pay attention to their portfolio underwriting, and they cannot understand why their portfolio is not profitable. But they just don't see that their portfolio is not diversified enough. Even with the good underwriting of the individual risk, still the portfolio can be not that excellent if you don't pay attention at this like holistic perspective. IT system. Okay, I know that India is quite innovative in terms of these new technologies and computers, IT, and so on and so on. But I don't know how sophisticated the IT systems in the insurance companies when we talk about the agriculture portfolios. At that stage, when I was working with Indian portfolios, I would say it was very sophisticated. Sophisticated is like when you can derive the report of your portfolio, when you can have a different perspective of your portfolio at any point of time, and then you can analyze different elements of the portfolio. And I know that it was for the Indian companies, it was for the underwriters, it was difficult to derive the certain figures, certain information. They need to wait for a very long time. Or at the initial stage, the information that needs to go into the information system, it comes with a big delay and so on and so on. Because it's like the original people, they need to put this information into the system, so on. But it's, nowadays, everybody wants more business, everybody wants more profit, everybody wants more income, and so on and so on. It's enormous amount of the transactions. It cannot be done without the sophisticated information system. The portfolio analysis. It's here I picked it up from the Swiss representation. Here you see the historical result of the portfolio. You remember these jumps of the yields, and this is the agriculture portfolio, also quite volatile, and this particular portfolio is volatile. And and this is the loss ratio. As actually there were only few years where the loss ratio was below 100%, but in the majority of the cases it was way above 100%. It's very unprofitable portfolio. And here the reinsurers were fed up, said enough, we will not reinsure anymore unless you put some improvements into your portfolio. In most of the cases, in such cases like the deductibles are increased, the direct terms are changed, and then the portfolio shrinked, the less premium, but better profitability. And basically, that's what the insurance company needs to do. And what I hear from the reinsurers in Zurich, for example, concerning the Indian business, they are not happy with the profitability of the Indian portfolios. So there were some years with the high loss ratio, some relief with the normal loss ratio, and again high loss ratio. So you can, in agriculture, you can have high loss ratio. It's normal. It's the weather. It's the consequence of the weather. But it should be random. And it should be compensated by the positive result of the previous years. But when you have 3 years of the bad loss ratio, 1 year more or less good, and then again bad loss ratio, it's not compensating. This is the example from Germany of all their system, the loss adjustment with the use of the tablets, and that communicates to the entire management information system. So, for example, when the company receives the loss notification, it's registered in the system, and the employee of the company gives the order to the loss adjuster, go to the specific field, to the specific point, and assess the loss. The loss adjuster goes to the field, and he has the tablet where he has all the information about this policy, because it comes automatically from the system, from the office. So he knows how many hectares are covered, what kind of crop are covered, what the level of the yield is covered, and even the history of this farmer, and so on and so on. Then he has very clear instruction, algorithm guideline, how he calculates the loss, and he immediately puts these figures, these numbers into the tablet, and basically these figures immediately goes back to the system. And the farmer even can put the electronic signature in this tablet. But here he might use the drone. If, for example, this is the field with the high standing crop, like sunflower or corn, so you cannot see what is the entire view of the field from the edge of the field, so you fly the drone gives you like the picture over entire field, and then you detect to which part of the field to go. And then the whole information goes into the system in the office, and there is the claim manager who is processing this information, and so he is issuing the final decision of the insurance company to pay the claim, and then this claim is communicated to the farmer with all the not only the number but also the explanation, what was observed by the loss adjuster, and if, for example, the payment is reduced, why it is reduced, and so on. There can be the disputes. The farmer can be not agreeable with this number, and so that's normal. And so then the insurance company need to send the loss adjuster once again, or to send another loss adjuster once again until, like, to satisfy the farmer, until he can really agree to this loss payment. But I would say in Western European countries probably happens not that often. So because everything is very transparent and everything is communicated, pre-calculated, and the farmer can see this, and this is the same practice every year, and probably the same loss adjuster every year, so they already have the relationship with the farmer and so on. But in Russia, for example, 20% of all the loss payment cases go to the court. And so the system is so untransparent and so subjective that what is happening. And here just like picture of the crop cutting experiment. But well, I've heard that the companies that are doing crop cutting experiments, they are using apps, the mobile apps, but the disadvantage is that there are few companies and every company uses own app. This is not centralized. You cannot to calculate the percentage damage absolutely objectively, absolutely precisely. There's always some compromise. There's always some subjective decision. So, but when the loss adjuster communicates to the farmer personally and gives him the attention personally, that's when the farmer is more satisfied. So the satisfaction comes not from the figures, the satisfaction comes from the human connection.
See, that type of thing is possible. You said that the customer, if he comes back next year, let's say that he is satisfied. In India, we have the model where it is tenders are invited for a cluster of maybe 5 states. Then whichever insurance company is selected, it becomes the monopoly in that state. Customer does not have choice, farmer does not have choice to go to somebody else. So we are creating a very different type of scenario for our farmers.
Absolutely. But in this respect, your farmers don't have choice and your insurers don't have choice. It seems like the government is ruling this. But that's not, as far as it is sort of compulsory for these only farmers, then it exists. But if you would give the freedom in this process, then the farmers will stop buying and the insurance companies probably will stop selling. So it's just like for the moment it's completely different basis of the system. No, that people cannot, with all their freedom, they can tell what they want because the government is deciding.
But in new guidelines, the revised guidelines, there is a choice of the farmers in case of monopoly farmers. If the annual is charging the same at L1 rate.
L1 rate, same.
Yeah, but see, when the system that exists around the system.
There are tender for 3 years also.
For 3
There
years?
are several states makes a tender for 3 years. So up to 3 years, the same company is prevailing in the market.
Like I would say that it is healthier for the agriculture insurance when the farmer is insured by one insurance company over the years, because then insurance company also accumulates certain statistics for this farmer, for this region, and can be more sustainable. Maybe it can reduce the insurance rate by based on the real insurance result.
No. At that time, insurance rate, pricing of the premium is increasing. The insurers are always charging more because 2 years is unpredictable for them.
In case
that is why I don't understand, because the 3 years business, continuous business given to the one company, there is a rationalization of charges of the premium, but it is not practically not done. Practically they increase the premium.
Insurance or reinsurance?
Reinsurance.
Reinsurance. Yeah, because for reinsurance there is the referral process inside.
Making losses in this cluster, then we can move out of it.
But that time the premium charges are heavily, they charge heavily. So they make money.
No, let's suppose it that
Yeah.
if the cluster is allotted for 3 years, then same rate will be valid for 3 years.
Yeah.
It is only that the sufferer will be either the insurance company or reinsurance.
You want to tell the historical data. On the historical, based on the historical data, they charge the premium. They charge the premium higher rate. So there is no case of suffering either farmers or the insurance company.
But that's exactly what you are naming. This is the examples how every insured and insurer, they have the opposite interests, right? So you have the system sustainable only when these interests have balance. But for this, you need to have the body above all of this and take into account the interest of different these stakeholders and build very wise system. And I think Turkey is doing this quite wise.
Those who are intelligent, they can protect their own interest.